Hello friends, as promised in the last Google Stock video, in this video we will now go through my portfolio on how it stands today. Firstly, I will do one change in how I present my portfolio to you compared to older videos I had. I will remove from the pie chart my cash position and present to you only stocks and ETFs I own. I don't think showing my cash position to you makes a lot of sense since to answer the question how much cash one needs to have available for investing is such a personal one, and so I feel me telling you how much cash I have at the moment won't give you much value. It's up to everyone to decide on themselves how much cash one should have available at any given time in your investing journey. But the only thing I want to say is that for myself, I always have cash available. You never know when the market crashes. You never know when you have an opportunity to buy more of some good stocks you already own. I would say that it's probably never a good idea to be 100% invested. Surely you can sometimes have more cash than on other times, but then again, that's pretty close to timing the market and something which is pretty difficult to be successful in timing the market. So I'm just gonna state to you now that I'm gonna remove the cash position from the pie chart I'm gonna show you, and just letting you know that I will always have cash available myself to take advantage of those wild swings the market presents sometimes. But yeah, as you know, those market swings can happen pretty often, actually, every once in a while, every year or so. Last time it did happen was in the Corona crisis, when the Corona pandemic started, and again, those crises do happen, and they usually are the best times to buy stocks when everybody goes crazy in the stock market and there is blood on the streets, as Warren Buffett would say it. So yeah, I always have cash available, you know it now, but I will not show it in these pie charts where we go through my portfolio. Second thing I want to highlight to you and tell you is that I feel it is very necessary for me to disclose the positions I have, tell you which stocks I own. To be honest, I find it quite funny and a bit odd when you see lots of YouTubers here on YouTube talking about stocks and not really disclosing what they own themselves. I have always felt that you need to be able to walk the talk and show everyone that you have skin in the game yourself. You are yourself invested in some stocks you talk about. So just to give you a little bit open my own thoughts to you, I feel like I need to share what I own with you guys, so you know that I'm being real here. And yeah, I just let me just say to you that myself, I would be very careful in listening to anyone talking stocks here on YouTube that don't disclose their positions. What do they own themselves? I think talk is pretty cheap and actions speak louder than words. So the people I'm following, the people I respect, they always disclose their positions. I know what they own. So that gives the whole thing a little bit credibility. So that's why I'm doing these portfolio videos to you. Alright, so we got those out of the way. Let me now first show you quickly how my portfolio looked the last time I showed it to you guys, and you can see it right here. As you can see, big positions on Flow Traders, Alibaba and Sprott Physical Uranium Trust. There is the cash position now, as you can see, but that one will be removed for the new update you are about to see next. Then what I had is some China Tech ETF there, 8%, Intel 6%. Those ones still exist in the new portfolio I'm going to show you, but the emerging markets ETF is sold, Baidu is sold, Geo Group we still have there, Turkey ETF is also sold, as well as India ETF is sold. And actually in this picture you see 0% in China, UK and US equities ETFs. Those positions remain really small also in the next or this update I'm gonna show you next. So this was the old portfolio in the last update, and now I'm gonna show you how my portfolio stands today. So 25%, now as you can see, no more that cash position, so some percentages might be a little bit higher than in the previous pie chart I showed you. But nevertheless, I've done some buy, some sell. For example, I bought a little bit more Intel. There in between, also you already see the new position Alphabet there, so that one has been bought as an addition. But let's go this through quickly now. So 25% in flow traders as a hedge against market volatility. Then 24% in Alibaba, 17% in Sprott Physical Uranium Trust. So these are the main three components of my portfolio at the moment. I have made videos on each of these already earlier. If you're interested about any of these three, you can find a video already in my channel, so go and check it out. Then 10% Intel, as said already, I a little bit increased my position there. I can't remember now which day, like a month ago or something, I bought a little bit more Intel. There is Franklin FTSE China, so China tech heavy ETF there still exists in my portfolio. As you can tell, Chinese tech stocks in particular have had a really rough year behind, so that position is down big time, but I am waiting for the direction of the wind to change, let's say. So still exists in my portfolio. And then the most recent new position I have, Alphabet, so Google. Just made my last video was about Google, so go and check it out if you're interested. Why I just 1 week ago or so, when was it, I bought, well, 1 week ago, 2 weeks ago, whatever, bought more Alphabet, or rather I bought it in 2 different times, but now I have open position in Alphabet, and we'll be watching that closely. If it goes even lower than the previous levels, might buy more, but now stands at 8%. And then finally, still the old position I have had for some time already, GEO Group, 6%. And those really small slices of the pie chart you see there, those are just the ETFs I'm investing every month, really small sum of money too. So nothing to be said about those there, so small positions. But then let me just conclude that I just for fun wanted to check how my portfolio is, my all-time performance is, and as you can see it from the right bottom corner, 4.5 years I have been doing investing. In the beginning, and lots of learning for myself too, but still my portfolio all-time performance is plus 43% in 4.5 years, which obviously I'm happy that it's on the plus side, and I'm hoping as my experience grows it will be even more heavily on the plus side in the future. So that's okay for me, and actually I got a little bit curious of how this 4.5 years here has really gone for me as an investor, even though in the beginning I was a beginner, as everybody of us are when we start investing, but as the experience grows, you should also expect better returns. When you get more experience, you learn more, obviously, and this is a journey for me, and the journey continues, and I'm hoping to improve every year only. But yeah, as you can see there, that plus 43% actually is if we're just discussing my annual performance, that would result in 4.5 years me annually earning 8.3% gains in my portfolio. So 8.3%, which is nice. Let's put that into perspective. I have found from JP Morgan Asset Management 20-year annualized returns by asset classes this study has been made between 1998 and 2017, so there's like 20 years time frame, so you might say that these are pretty average returns you might expect in different classes. So just wanted to highlight you from that statistics, that study by JP Morgan, that average investor has between these years 1998-2017 made annual gains of 2.6%. So my 8.3% compared to average investor 2.6% is much better. So I'm definitely happy on that. I'm beating the average investor by a big margin there, 2.6% versus 8.3%. But then if we compare the Standard & Poor's 500 index, that would have made you returns annually of 7.2% between 1998 and 2017. So I'm 1% better than Standard & Poor's 500 historically, which is great. I'm happy for that achievement actually. But that was, as said, between 1998 and 2017. And then I looked at if I would have invested all my money, basically I had ever during these 4.5 years, how much would I have been able to make in Standard & Poor's 500 between, let's say, February 2018 until this year's May 2022 May. If we take total Standard & Poor's 500 return with dividends reinvested, that would have gained during these 4.5 years or so 63% gains, and that would be annualized return with dividends reinvested of 12.19%. So Standard & Poor's 500 has beaten me by a big margin. Standard & Poor's have returned to you every year 12.19%, as my portfolio returned 8.3%. So yeah, you might say it would have been more wise for me to invest all my money in Standard & Poor's 500 during these 4.5 years. But obviously, if you look back the last 4.5 years, that was pretty red hot market for Standard & Poor's 500. And obviously, Standard & Poor's 500 had great 4 years here up until, let's say, this year's January, huge gains. Okay, the gains were huge, but that doesn't necessarily mean that the gains will be huge for the next 4 years. So give me a little bit more time and I try to beat Standard & Poor's 500 when I'm doing this same update 4 years from now. And to put things even a little bit more in perspective, as my gains during these 4.5 years were annually every year 8.3% on average. Let me just quickly read you what some great super investors have made during their time of investing, during their investing careers. Some of them are still investing, some of them not. But let me just quickly show you here the percentages and how much these guys have beaten the S&P 5 Standard & Poor's 500 S&P 500 index. So first up, Monish Pabrai, 12% annually gained. That outperforms 4.3% Standard & Poor's 500. Seth Klarman, 12.8%. That outperforms Standard & Poor's by 1.1%. Then Bill Ackman, 14.3% every year, outperform 5.2% Standard & Poor's 500, the index. Then last but definitely not least, let's say my two favorites, the number one, number two, whichever you want to go, number one, number two, the two greatest investors of all time, in my opinion. Warren Buffett has made annual gains of 21.3% and has beaten Standard & Poor's 500 by 10.9% on average every year. And Peter Lynch, 26.5% annual gains with 13.2% outperformance in comparison to Standard & Poor's 500 throughout his investing career that has already ended. Lynch's investment career in this study has already concluded. Warren Buffett still ongoing, as we all know. Warren Buffett, Peter Lynch, 21%, 26.5%. Those are some goals for everyone to achieve. You can just only dream of returns like that. But as said, I try to improve all the time, and let's see how far I can go myself. Yeah, by the way, these statistics of these super investors were found on Twitter and I found them on some Twitter thread, and haven't double checked the data if they are 100% correct, but if you can trust good finance people on Twitter, then I hope they are correct. At least to me, what I've read from other sources, they might be correct. So just as a quick note here, do not believe everything you see on internet, but those seem to me that they might actually hold true. And yeah, I felt it was nice to show you just how my returns compare to the Standard & Poor's 500 historically or during the specific time frame I have been investing to, and just to quickly show you how these super investors, what kind of returns they have made annually. So there are some great goals, great numbers for each of us individual investors to chase and try to outperform these superstars. I'm gonna keep on learning. I'm gonna keep on continuing my journey. I hope you will be with me through this journey, watching my channel. Please subscribe to the channel if you haven't done so, and thank you for watching this video. See you in the next one. Bye bye.